In this chapter, we're going to talk about managing pricing and different and more innovative and more strategic pricing strategies that we'll need to look at in the future. We've already talked about communicating the need for care, marketing your practice. All of those things tie into pricing. You can't look at pricing in a vacuum. It has to do with value as well. So we'll touch on that too. After this chapter, we'll also look at friending cats and making it easy for clients to visit your practice. There have been very significant fee increases in veterinary medicine since about 2004. If you looked at the 2-year time period, 2004 to 2006, about 3/4 of veterinary fees increased above the rate of inflation. So inflation during that time period was roughly 3% a year. If we looked at anesthesia fees, we saw that 2/3 of anesthesia fees increased 11 to 24% above the rate of inflation. What that really means is they increased 17 to 30%. So very, very dramatic fee increases. We saw the same thing in treatment procedures. About 3/4 of those fees increased 6 to 22% above the rate of inflation, and surgery fees had some of the most dramatic increases. Some of those fees increased 54% above the rate of inflation. So during this 2-year time period, veterinary fees went up a very large amount. Now, there's no doubt that prior to this time, before, say, 2000, veterinary fees were quite low. And without a doubt, veterinary fees needed to increase. They were too low compared to the education, the experience, the value that we bring in providing pet care. But these kinds of fee increases are not sustainable into the future. And of course, after the early part of the 2000s, we did see the rate of increase slowing. And so actually, while fees continued to increase from 2006 to 2008 and again on into, say, 2010 and 2011, the rate of the increase was much less than that shown on these slides. However, there are many practices out there who continue to put fairly strong fee increases into place every year. So that might be 8%, 10%, or more. I mean, clearly fee increases that were above inflation, which hasn't run much above 2 to 3% over the last decade. What we're finding is that clients are noticing those fee increases. Price is one of the issues that we looked at in the Bayer Veterinary Care Usage Study, and we found that there is definitely some pushback, and you could see that in the questions that we ask of pet owners as well as the ones that we ask of veterinarians. So if we look at the questions that were asked of pet owners, we found that about 26% of pet owners completely agreed with the statement that costs are much higher than they expected. And there was another 28% who didn't disagree with that statement. So you've got well over 50% of pet owners who either agree or are neutral on the subject of costs being higher than expected, but they clearly don't find costs to be a bargain or to be what they anticipated when they visited the practice. We have about 1/4 of pet owners who say they're always looking for less expensive veterinary options. You've got another 30% who either say, I somewhat agree with that statement or I'm neutral. So again, we've got well over half of pet owners who either actively say that they are looking for less expensive options or are neutral on the topic. But they certainly don't agree with the fact that they are not looking for less expensive veterinary care. Again, there was a question about would you switch to a less expensive veterinarian, and about 51% of the pet owners either agreed with that statement or neutral. What's important about all of this is that well over half of pet owners are concerned about price. Less than half say price is not an issue, or I'm not looking for a cheaper vet, or I wouldn't switch if I had a coupon or a discount. So it's clearly become an issue with pet owners. We asked some questions about pricing in the veterinarian part of this survey as well, and 74% of veterinarians said it's more difficult to increase fees than it used to be. And those fee increases, such as I showed you on the previous slide, were one of the main ways that we have increased revenue and increased profits over the last 10 years. We also saw that 49% of veterinarians definitely agreed with the statement that clients are increasingly complaining about fees. So no matter whether you talk to pet owners or you talk to veterinarians, you see this price pushback. So then it becomes a question of what do you do about it. And the first thing that people say is, well, what should I do? Should I revise my fees? Should I drop them? It's not a completely simple question, and pricing is not a strategy that can be dealt with in a vacuum. So the first thing you have to look at in your practice is, how are you doing now? And if your practice is truly profitable, and that means you've actually calculated the practice profitability and it's above average, and if your practice has real growth in transactions, visits, new clients, and active clients, I probably wouldn't change my pricing strategy. What you're doing now is working. However, most practices don't fit into that category. So you say, all right, I'm not truly as profitable as I want to be. I'm not seeing real growth in transactions, visits, client numbers. What are some of the things that I could do price-wise? You know, the first thing that comes to mind is, should I have an overall reduction in fees? I don't generally recommend that for practices. I don't think that's a smart way to start. Occasionally you'll see a practice do it, and occasionally there's a practice that is so far off the mark in what they're charging that it makes sense. But if you're going to have an overall reduction in fees, first of all, you're going to have clients who would have come to see you anyways who are now paying less. And secondly, for that to work, you've got to very clearly advertise that, because if you reduce your fees, you've got to bring in more clients to make up the difference. So in general, that's not a strategy that I think most practices should engage in. However, I think we do need to look at our future fee increases, and I think those are going to have to be smaller and more limited than what we've done in the past. I think being able to regularly put a 10 or 12% fee increase into place in a practice is simply not going to work anymore. We're also going to need to look at well-designed, well-monitored discount programs. And discount is a word that's been nobody likes that word in veterinary medicine, and we tend to think that discounts are always bad. But I think it's important to think about the fact that discounts are used regularly as a pricing strategy and as a business strategy in many, many other kinds of professions and other kinds of industries. One of the things that we tend to say when we talk about discounts is, well, my pediatrician doesn't do a discount, or my internist in the human field doesn't give a discount. That's not true anymore. I live in Dallas, Texas, and I was driving to the airport one day, and I was listening to the radio, and there was an ad from the North Texas Regional Healthcare Center. And what they said is that they were having a 50% off sale on colonoscopies. So if you came in the next 2 weeks, you could get your discounted colonoscopy, and in addition to your 50% off, you got a free exam from a gastroenterologist. So discounts are here in the human field, and we can no longer say, well, why should we do it? My human doctor doesn't do it. The second thing that we tend to say is, well, professionals don't do discounts. And that also is not true. In my pre-veterinary life, I worked for one of the largest accounting firms in the world. And if you wanted your tax and accounting work done between January 1st and April 15th, you were going to pay our premium prices for that work, because we had more business than we could handle. But if you could wait and have your tax and accounting work done from April 16th through the summer, we would be more than happy to give you a break on prices, because that was our less busy time. So a CPA is just as much of a professional as is a veterinarian, and as you can see, many, many CPAs use pricing strategies effectively in their businesses, and it doesn't make people think less of them or think that they're less of a professional. When you talk about price, you can't just talk about the absolute dollar charged for a product or a service. That's one component of this concept of price. But price is also about value, and it's also about the ability to pay. If people see value in what you're doing, then they will be more willing to pay whatever it is that you're asking for it. If they don't see value, then price is going to become more of an issue in their minds. Price is also about ability to pay. People may see value in what you're charging. They may be fine with the absolute dollars you're charging for a particular service, but if they have $100 in their checking account and a maxed out credit card, it doesn't really matter that they find value in what you do or think the price is okay, because they simply don't have the ability to pay. So all of these things have to be addressed when we're talking about this whole concept of price. This slide comes from the Bayer study, and what this slide looks at is the value that pet owners found when they visited a veterinary practice. And you can see here, if you look at the green circle on the right, there were some things that pet owners thought practices did very well. They thought the vets were friendly, they thought the staff was friendly, they thought the range of services offered was appropriate. If you move over to the yellow circle, in general, they thought that the reminder method was a strength of the practice. The hours of operation were fine. The fact that the appointment was seen on time was in general fine. Those weren't as strong a factors as the first ones, but still they were a positive part of the experience. As you continue to move to the left on this slide and you look at the orange circle, you'll see that pet owners said the waiting rooms at veterinary practices are not comfortable, both for pet owners and for the pets. And of course, this one makes no sense that we continue to see this in surveys. 10 years ago in the Brachy Behavior and Management Study, we found that waiting rooms weren't comfortable, clients didn't like them. We still haven't fixed that problem. Clients still don't like them. And when they're looking at the positives and negatives about their visit to the veterinary practice, this is one of the things that they don't like. And this is one of the easiest things in the world to fix. So why we continue to not fix that makes no sense. The most important part of this slide, though, is what you can see in the big red circle. And what pet owners said is, I generally don't find value when I visit the veterinary practice. So they're looking at the whole experience and they're looking at the cost and they're saying, I don't find value there. The concept of payment options was something that they also thought was a negative in visiting the veterinary practice. But the value one is really the point here that I want to make. They will be more willing, pet owners will be more willing to pay what you ask for your services if we can increase that value component. So the big question then is, how do clients judge value? There's a very, very interesting article in the Harvard Business Review, and this article is about the Mayo Clinic. And the Mayo Clinic is one of the best-known brands in the human medical field, and that would be worldwide. And the Mayo Clinic actually spends very little on formal advertising and formal marketing. But they have an incredible attention to the client experience, if you will, that has won them this reputation. One of the things that they said is that when a company's offerings are hard to judge, customers look for subtle indicators of quality. What they're really saying here is, when we visit the doctor, we don't understand medicine, so we have to judge our experience by things that we can understand. And it's the same for pet owners. For the most part, pet owners don't understand medicine. I mean, unless you amputate the wrong leg, they really don't have a clue as to whether your medical recommendations were appropriate. What they're judging is service. They're judging the whole client experience and they're judging what they can understand. So I tend to think about it as being similar to when I visit a car dealership. I have no idea how my car works. I have no idea if the car dealership fixes it appropriately. So I judge whether or not I'm going to go back to this car dealership based on things that I can understand. So what I look at is, did they look down their nose at me because I'm a woman who doesn't understand her car? Was there a reasonably comfortable chair that I could sit at and work on my laptop while I'm waiting? Did they have a Diet Coke machine so I could drink a Diet Coke while I worked on my laptop? And if they told me the oil change would take a half an hour, did it take a half an hour or did it take 45 minutes? Those things have nothing to do with the work that they're doing on my car, but they're the only things that I can understand, and that's how I make my decision about whether or not to return to this place. And it's very, very true for pet owners as well. What was interesting about this Harvard Business Review article was the kinds of things they talked about and the recommendations that they make in there. Many of them are very similar to recommendations that have been made in veterinary medicine for years, and they're things that we can easily do. I mean, some of it has to do with people dressing like professionals and not coming out and seeing clients with blood all over their scrubs or their lab coats. It has to do with focusing on the client first and doing what's convenient for the client instead of what's convenient for us as doctors or team members in a practice. So those are the things that pet owners, the clients, can see and are going to make a judgment about. The attention to detail that the Mayo Clinic spends on those things has made a huge, huge difference for them, and there's no reason it can't for us as well. So when we talk about managing client cost, There's a couple of specific areas that we can look at. We have to remember first that fee increases are not the only way to improve profits. And in fact, that can be counterproductive. I mean, at some point, if clients are wincing every time they come into the practice, then they're not going to come in. And that means there are going to be times when their pet should see a veterinarian, but they won't because they're like, I won't be able to get out of there for less than $100 or 120 or whatever that number might be. Certainly having a written financial policy is important. It's critical that everybody in the practice understand what the payment options are, what's our policy on pet insurance, do we accept medical credit cards, do we encourage clients to apply for that if they're not sure how they're going to pay for things. We have to understand first what our policies are and then use this policy to educate our staff people as well. And then there are many, many options for managing client costs or helping clients manage those costs. Certainly, it's become clear, not just through the Bayer study, but just through common sense, that if clients can get products cheaper elsewhere, to a large extent they're going to. So if we want to continue to sell some products, we're going to have to look at offering them at a price that's competitive to what's out there elsewhere. Expanding payment options is an easy one, educating clients about pet insurance, offering medical credit cards such as Care Credit. Promotional discounts can make sense, and that doesn't mean go out and simply drop the price on a whole bunch of different things. You need a well thought out discount plan, well marketed, and then you need to track the results of that and say, okay, did this discount do what I wanted it to do? What you want any discount program to do is to bring in more clients or to have clients that would have come anyways spend more money. So you clearly have to make up for the dollar amount of the discount through increased volume. And that's a very, very doable thing, but the program has to be well designed and you've got to market it appropriately and monitor it appropriately. Wellness plans, like we talked about in one of the previous chapters, were very, very popular with the pet owners in this survey. And what they liked about it is that it was a bundled group of services, often discounted, but sometimes not in some practices. And those were the services that they knew they needed to provide for their pet to keep it healthy over a year. The programs, and they vary in different practices. Sometimes there's an upfront payment, sometimes there's not. But in general, the programs are spread out. The payments are spread out over a year. So it's easier for clients to pay $25 a month or $40 a month than it is to pay $300 at one time. And so that is another way that we can help clients manage their costs a little bit better and see it benefit us as well. If you include a discount on your wellness plan, the caveat on wellness plans is the caveat for any other discount program. It has to bring in more clients or cause the clients that are already coming in to spend more money for it to be something you want to see happen in your practice. But a well-designed program and a well-monitored program can certainly do that. We looked at client payment options in the veterinarian part of the Bayer survey, and if you look at the right side of this slide, you'll see that client requests for alternate payment methods has definitely increased. About 17% of practices said that had increased a lot, and about 52% of practices said it had increased a little. But clearly clients are looking for other ways to pay for veterinary care beyond having to write a check at the time of service. And yet what we found when we looked at the actual forms of payments that most practices took is that the vast majority of practices focus on cash, regular credit cards, or traditionally accepted credit cards, and checks at the time of service. When you drop down into some of the less frequently used payment options, you'll see that about 64% of practices did held or accepted held checks or post-dated checks. About 56% of practices accepted third-party medical financing such as Care Credit. And then as you move down the list, fewer and fewer practices participate in other kinds of payment options. What we're seeing is that clients clearly want expanded payment options. And while there's a fair number of practices that are offering that, there's still a bunch of practices that are not and that need to consider that in the future. A couple of studies definitely show that payment options make a difference. In 2006, VPI looked at the amounts of money that their policyholders spend versus people who don't have pet insurance policies. And what they showed is that there were 41% higher stop treatment levels with the people that have pet insurance policies. Those people scheduled 40% more veterinary visits, and they spent twice as much on veterinary care over the life of their pets compared to non-policy holders. And that study was conducted by an independent market research firm. CareCredit also had a study conducted by an independent market research firm in 2010, and what they found was that 71% of their cardholders said that having a financing option affected their decisions regarding the level of treatment they provided their pets. CareCredit recently had another study done that was debuted this year, and it showed a clear correlation between having CareCredit as an option and the amount that pet owners spend. So no question, if pet owners know that they can more easily pay for veterinary care, they'll elect to provide that care. Client interest in pet insurance has also increased over the last few years. About 43% of the practices in this study reported that clients were expressing more interest in this as an option. Pet insurance, though it's been around for a long time, has yet to be fully embraced by the veterinary industry. There have been concerns that pet insurance would be too much like human insurance. We've been concerned about, should we essentially be insurance salespeople to our clients? And yet I think this is an issue that we're going to have to understand better and decide how we're going to deal with. I think every veterinarian needs to have a better understanding of insurance and make sure that they truly understand the product before they make the assumption that it's going to lead us to in the same position as the human field has gone. I mean, clearly nobody wants to be like the human field, but pet insurance is a different product than we see in the human field. We also need to understand who's offering pet insurance and what some of the different plans are like. I firmly believe that clients want a specific recommendation, not just a general, well, you ought to think about pet insurance. And that means we need to spend some time understanding the programs, understanding the companies, but we need to be able to speak intelligently to our clients about it. In fact, if you search on DVM 360, you'll find a list of questions that you can use to help understand pet insurance programs better and to give to your clients so that when they're doing some of their research, they have some idea of the kinds of things they should focus on. In the next section, we'll talk about friending cats. Without a doubt, cats don't visit the veterinary practice as much as they should, but there's much you can do to change that in your practice.